How's it, guys? Welcome back to FX Rhapsody. Today we're just going to do a little bit of a look back on what markets did this week so far. Look at a couple of setups. Basically just the way that I do my analysis, and then I will show you where you could have entered and exit and all that kind of things. Before we hit the chart, just go visit my website. It's on the bottom left corner here over here, where you can see my previous analysis, previous videos regarding trading, anything that you need to know, especially when you're starting out on trading. There's some nice video categories for those of you that's a little bit more advanced in trading, as well as some nice strategies and just, a recap on your trading. And also preferred brokers, guys, go check them out. These guys are brilliant, especially when it comes to your spreads, leverage and margin, all the things that you need from a really good broker. Just go check these guys out. Okay, so we're going to start off on, we're going to do three analysis, or just a look back on three pairs quickly. The first one, all of them are going to be just on the 1 hour time frame, just to see where the setups happened this week. So the first one we're going to start off with is the British pound US dollar. So for those of you that watch my analysis or watched it over the weekend, you would know that I always draw my lines that I keep just to look at where market is going to go. It's always on the end of the analysis. I just draw these lines just to map out what I'm looking at for this current week. So as we can see, is these two lines were drawn, and we saw that the British pound took a nice tumble downwards, and then coming back to retrace after breaking that line. So simple little entry that you could have taken. It's for those of you that watching this and saying, oh, this is hindsight. No, guys, just this is how you train your mind to do your trading. The more you look at these things, and the more you can actually go back on your chart and just go scroll back and do some back testing as well, and see how this happens all the time. So a little bit of a setup. What you do is, after this break, you have your swing high and your swing low, and then a little bit of a retracement. I mean, this simple little Fibonacci retracement. So all you do is you take your Fibonacci from that swing high to that swing low. Because price broke that structure, it comes back and it retraces nicely to that 62% area. I mean, that's a nice area that you could have just sold off. And then, I mean, just to put it all in perspective, if you had to take your trade all the way to the bottom here, it's going to be close to a 90 odd pip sell that you could have taken. And then after that sell, basically, you look at, okay, where's price going to go to? So you zoom out a little bit and you look at your previous lows that created or was created in the market, and then you just map out all these areas. Okay, so I mean, that's a previous low. So you know that price gets drawn to those liquidity areas, because once it broke that line. So I'm just going to take this out so you can see it clear. So basically, you have got that line that I've drawn, and then you have got all these areas in the market where liquidity is still lying. So you have your first area, it's over here. Okay, so all the liquidity is lying below that. So as soon as market, or as soon as this structure got broken, you know that liquidity is going to be hunted, and liquidity is all below that areas. And that's the first area. And then you can tap, there's a couple of areas over here. So you just, map your areas in the market. You draw those lines out, and that's the areas that price going to get drawn to, because it wants to go and hunt that liquidity. So as you can see, price broke that area, retraced nicely with that 62%. So now you keep watching it. It tumbles through that area, and then the next area, and then the next one. So you keep holding your trades until you see some kind of a pullback, basically, or a turn in the market, which happened here. So you climb out of your trade, and you see there's a nice little turn in the market. I'm just going to take this out. Okay, so again, price turning, breaking that structure area, which is around about here. And as you can see, with a nice bullish candles, pushing through that area. Then what happens is price creates a nice little fair value gap after that push. Okay. Now, when price gets to the top here, I'm just going to zoom out a little bit. So price moves up and it makes another turn. So now you're sitting in, okay, you've already taken a nice little sell setup for the week. So now on this, one pair, it's close to 100 pips that you've caught. So now you think to yourself, okay, cool. Is there another area that I can catch some pips? snap it, you know. So you can see this area over here, a little bit of consolidation happening after that big push. So now price gets drawn down. So you map out this area and you know, okay, cool. Price is going to get drawn to that fair value gap area at least in the market. So where can I catch a nice little sell? You know, right there. So as you can see, price breaking through that, hitting that area, coming back, pushing into that area. There we go. So this is all going to be on the lower time frames, obviously, guys. I'm just mapping it out on the higher time frames. So as price pops into that area, you just sell it off. And then as you can see, price dropping again very nicely. Coming up again into that area, sell it off. And these sells you catch on the lower time frames with your sniper entries. And that's all a little bit of, you know, extra pips that you could have caught. I mean, I'm just going to mark it out. Say you caught it there and then all the way down. It's another 50 odd pips. So you're looking at one pair for the week so far. I mean, we're a couple of days into the week. Well, it would have been halfway through the week if you caught this, you know, up until yesterday. But I mean, that's over 100 and odd pips that you could have caught on one currency pair. Okay, so that's quite easy, guys. Don't just stick to, you know, you can trade the way you want to, basically. But I'm just showing you what you could have made on certain currency pairs. Let's look at the next one quickly, right? Let's just look at the Euro USD. Like I said, I'm not sucking these things out of my thumb. I'm just trying to help whoever wants to catch a nice amount of pips. Euro USD, okay, we did some nice analysis again over the weekend. Then I draw these two lines, right? So I'm mapping out and saying, okay, I'm going to be watching these two lines for any break of structure on that. And then once price breaks, I'm going to react to the market. So what happened was price broke, as you can see, broke the bottom one. And then with that break, created a gap in the market or in the candles, fair value gap. So price went down. Then what happens? Price gets drawn into that area. It's quite simple. No big indicators, nothing. It's one simple little fair value gap in the market. There's no multiple lines and confusions and whatever the situation. So what you do is you catch your entry right about there. And look at this. Price drops and drops and drops. Again, almost another 100 pips. So it's another 90 odd pips. Again, where does price drop to? You zoom out a little bit. Okay, you can map this out on your 4 hours, but I'm just sticking to the 1 hour just to show you. So you have got your previous low on the 1 hour. Okay, that's a low spike. As you can see, price pushing through that area. Then you have another one just below that. So you know price gets drawn to those areas, okay? Because it wants to go and hunt liquidity. For those of you that hasn't seen my liquidity videos, just go search them in my channel. It's really brilliant, guys. So you're saying liquidity was not tapped, but if you can see there, right there, that candle. Oops. Right there. It just takes a little bit of a, just past that area. I'm just zooming in so you can see that. So price hunts that liquidity. Okay, pushes through the first one and then the second one. So that's the areas that you target that your price is going to go to. So that's basically quick and easy 90 odd pips. Currently, what we're sitting with is, I'm just taking this out. So again, structure gets broken after this big downwards movement. Then we saw a nice bullish engulfing and then price pushing through that area. Then it creates a fair value gap. So there's two fair value gaps that was created. The first one at the bottom. So what you do is you just highlight that area. It's not always that price gets drawn to that area, but excuse me, guys. So I'm more focused. Sorry, I'm more focused for when price gets to this area. So you can see this is a nice bullish candle. Okay, and this is the structure. So price pushed through that area and then it created a nice gap in the market. So I'm just extending that. So that's the nice big gap in the market. So price coming down and it pushes down even more. You could have had your Fibonacci, because again, just too little simple. You get your fair value gap and your Fibonacci. You pull it out. So you're looking at, I'm just going to draw it here. I'm going to draw it extended, so I'll show you exactly where my high and low is. So basically you have your low, your swing low, price going up to the swing high. So now price hovers, going into the fair value gap. So you're waiting until price goes into your 62% area. Look at that. Right there. Okay, price dips into that area. Oops, that's deleted it by accident. So price dips into that area right there. And again, smooth, quick little entry with not a lot of drawdown. So let's say you hit that entry on the basically 62 line, price moved up, again another 40 odd pips. Okay, so that again, second pair, 100 and odd pips. So you're sitting with over 200 pips now, halfway through the week, 2 pairs. That's it. Last little pair I'm going to look at. Okay, I'm just going to do 3 pairs like I said to you. You can do this with your pairs that you're trading or whatever the situation, but always look at how price reacts to certain areas in the market. So I'm zooming out again, just to show you. Well, let's do that. This is the USDJPY, US dollar Japanese yen. So price, I marked out 2 areas in the market. Price went up, went down again. Okay, this is now very interesting because you could have had 2 entries over here. So as price went down and it went up, it respected that area and it dipped down again and it made a little retracement because it's such a nice gap. Let's do the Fibonacci. Okay. So as you can see, price going nicely to that 62% area. Quite dipping into it. Look at that. I mean, how clean is that? Just dipping into that area. Then you take your buy right there. Bam. Price going up 132 pips. Okay, that's it. And eventually price broke that area, went down again, and after that break, let's just extend that area so you can see. Oops. So it actually came and retested that low, oh, that high basically. Where's my Fibonacci? Let me just take that out not to confuse it. Okay, let's just do that. There we go, it's a nice area. So what happens is price goes and breaks that area. There's multiple fair value gaps that gets created in the market. So you have one down here, and then you have another one over there. Okay, but let's look at the one where price actually broke that structure. You have this one over here. So you keep mapping them out and see where price is going to head towards. So as you can see, look at that, respecting that one, not breaking this area over here. Just going to take that out. So again, price gets drawn to that fair value gap in the market, then price shoots up. Okay, easy little. Where does price shoot towards? You zoom out, you get a high that was created here. Price hunts liquidity, correct? That's the areas that price goes to. So you have a break in structure. Okay, zooming out, let me show you. So you have a break of structure, price retracing to that fair value gap, pushing up, hunting liquidity. So if you caught the early entry here, you would have been 100 pips, 100 pips strong because price pushed through that area. And if you caught this one over here, that would have been another 130 pips up. So guys, it is really simple and easy. There's no, multiple lines and everything on my chart, confusing everything. As simple as possible. You try to simplify your trading. 2 little things, you look at your fair value gaps and you look at your Fibonacci. Those are the 2 things that you use trading. Currencies, I mean, anything that you can think of, you trade them. I've showed you on multiple videos how you can trade it on NASDAQ, on even Bitcoin. So guys, hope you enjoyed this video. And like I said, this was just a breakdown of what's been happening on these 3 pairs this week. If you liked it, don't forget to hit that like button, hit the subscribe button, hit the notification bell. There's definitely more videos coming your way. And guys, I hope you caught some nice pips. I hope you're staying safe and happy trading, guys.